All right, fellas. For this week, our topic train discussion is how to invest in a bear market. So what is a bear market, right? A bear market is defined as any period in which prices fall by 20% or more, which typically makes many investors afraid of investing in the markets. During this time, a lot of people end up taking their money out of the market, which then results with them losing any gains that have been erased by the current market condition. Now, one thing to remember, though, is after looking at the past, is that a bear market has always been followed by stronger gains in stocks that eventually, as a whole, ends up stronger before the bear market began. So here's the first tip from the flip. Invest in index funds. For most investors, most of the time, the best investment is in an S&P 500 index fund. For example, you have FXAIX, which is the Fidelity 500 Index Fund, SWPPX, which is the Schwab S&P 500 Index Fund. And if you remember from 2 weeks ago, Nick invested in the VFIAX, which is the Vanguard 500 Index Fund Admiral shares. So these tend to give you the best balance of diversity, since an index fund represents a broad spectrum of individual stocks and assets versus growth. So while individual stocks may not recover from a bear market, historically the stock market overall tends to do so. As a result, buying into an index fund while the market is down is a good way to buy a historically strong asset.
Well said, Philip.
Price.
That was a beautiful explanation of a bear market. It really was wonderful, bro.
Yeah.
That was very good.
Mm-hmm.
All right, so let's talk a little bit about this. Now, a bear market is something that brings a lot of uncertainty, right? So it brings a lot of uncertainty and makes people very uncomfortable, especially when we're talking about, common shares. We're talking about just somebody that's putting their money into the market and hoping for the best. Those are usually the people that are very, very hurt by the bear market. So my advice, what I would do in a bear market, I'm going to talk about both. I'm going to talk about investing and I'm going to talk about trading. We should probably do an episode that we go over like the differences between being a trader and being an investor, right?
Yes, sir.
Ooh, that could be a topic train for another day, man.
Mm-hmm.
Absolutely.
You know what I'm saying, Flip? But yeah, so let's go over this. I'm
Could
going
be
to give
next
you both
week.
aspects of what I think, in my experience, what is a sound advice. So let's talk about trading first. Now, trading is this is what I would say about trading. When you're trading in a bear market, number one, I think that you should focus on less trades, in my opinion. You should focus on quality over quantity. You don't want to be reaching. You don't want to be messing around with too many penny stocks, things like that. You don't want to go anywhere near things that can go to zero, especially in a bear market. So that would be number one. So I would be very, very cautious as to what you trade. Look for quality over quantity. Going back to the point that Flip made, I think that's very sound advice, even for trading. Even as far as a trader, if you want to be a little bit more on the conservative side, especially in a bear market, you can trade the index funds. You can trade the indexes. You can trade the SPY. You can trade the Qs. You can trade, all small cap, mid cap, large cap. All those things are on the safer side because it's gonna be hard for me to be convinced that those funds are going to zero. The S&P 500 is going to zero, so I don't think so. So if you feel like you want to be on the more conservative side and you're not ready to be very aggressive, either you're not experienced or you're not comfortable with it, then I would look to trade the indexes. Now, as far as investing in a bear market, I think it's all about quality. In my opinion, I don't think now is the time to really be reaching and going more into risk as far as investing in companies that are not making money or not real businesses and things like that. I think you should go for quality at this time. I'm not saying forever, but at this time during a bear market, I think your quality S&P 500 companies that are inside that fund, I think those are safe bets to put your money into during a bear market. So that would probably be my advice as far as investing and trading, and just be careful. You gotta watch yourself, and I would say you gotta be more on the conservative side than aggressive side in times like this. There'll be a time to be more aggressive, but now is probably not the time to be going too hard. So yeah, that's my advice. What do you got, Nel?
That's good, man. That's very good. Well, first I'm going to say this. Historically,
Nice.
There's been 27 bear markets and 27 bull markets since 1928, right? So what's the big deal? I mean, bear markets are a common thing, right? But the difference is that a bear market only averagely usually that lasts at about an average of 9.6 months, and the bull market lasts about 2.7 years, right? So since most of the times in the market they're good times, this is when you got to start preparing, right? So you prepare. Preparation means a couple things to me. You should be doing your research on companies during the bull market, giving price targets to companies. That means you're probably not gonna find a lot of good deals during the bull market. So don't buy them. Quote unquote cheap prices. So, but people always say, oh, but a stock's never gonna go. They're never gonna get down there, so you should just buy it anyway. Yeah, I mean you can. That's true, but if you're invested for the long term, you also need patience, right? So just look at the last 3 years. There's been plenty of opportunities where stocks dropped way below whatever people think was that's too low. It's not going to happen. 2020, even this year, stocks they've been crushed. So there's always going to be a chance to buy stocks cheaper. And then preparation, it also means how are you going to buy these stocks, right? And that's where we go back to the last couple of weeks, our topic trains, debt and budgeting. If your finances aren't on point all the time, you're not gonna be able to take advantage of opportunities during bear markets. So
right.
You do your research, have your money straight. You have to prepare, do your research, man. That's the most important thing. And then don't go all in on the first big down move. When that first red comes, I'm getting a great deal. Don't put all your money in there, because it could always go lower, as we've seen. It could always go lower. And then, of course, dollar cost averaging, it works. It's been a proven investment strategy that works. Nobody could really time the market. You could maybe time it short term here and there, like we've been doing with the industrials and the tech stuff. Right. But in the long term,
well, it just worked out for us. It wasn't, it's not a guarantee that it was going to stop.
I know it worked this time, right? That doesn't mean it's always going to work, right? So
right, like you could pick the bottom, but is it the bottom?
Yeah, you don't know.
It could go down another leg,
and it could be luck.
That's it, man. That's it.
I love the saying or the analogy. It's when there's a sale at a store, everybody wants to go shopping, but when there's a sale in the stock market, everybody's too afraid to buy. Like, that's right. You know what I'm saying? Why? That's just right. Be different. Don't be like other people, and go and build your wealth. Yeah. So that's what I got to say about that.
That was solid, bro. That was solid. Yeah, we need one of those like clapping sound effects. You know what I'm saying?
Yes, sir. So I mean,
that was solid though, bro. Good sound advice, man.
Cool.
Yeah, all right. Yeah.
All right. Woo. Well, my friends,